Of news at home and around the world, and we want to start with the number one issue for Americans, the economy. The Federal Reserve made a big move today, cutting rates by 0.5 percentage point. That's more than expected, and it is the first rate cut since the COVID pandemic in 2020 and the largest since the 2008 financial crisis. So tonight, the big question is, what does it mean for your credit card bills, your mortgage, your auto loans, and your pocketbook? And how soon could you feel the effects of the rate cut? CBS's senior business and tech correspondent Jo Ling Kent leads us off tonight with some of those answers.
After months of anticipation, the Federal Reserve today aggressively reduced the cost of borrowing for the first time in 4 years with a 0.5-point rate cut.
Our patient approach over the past year has paid dividends.
The central bank sending rates down from their more than 20-year high.
What message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there.
Inflation has cooled off from its peak of more than 9% in 2022 to 2.5% last month, as the jobs market shows signs of weakening.
Is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. We're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
The effects of this rate cut will take time to trickle down to consumers. For credit card debt, a 0.5-point reduction will mean $2 off monthly interest payments on a $5,000 balance. Payments on a new 5-year $35,000 car loan will drop by $8 a month. And monthly payments on a $50,000 home equity line would go down by $21.
I may need a new vehicle, but those are definitely considerations that you have to take in mind during these tough times.
This jumbo rate cut is welcome news for Gladys Ospina in California, who wants to update her car and help her brother buy his first home as soon as possible.
So it gives us options in the case of my brother to be able to help him and see him in a better position where he's able to buy his first home.
And Jo Ling joins us now. So a 0.5 point was more than expected, but what happens the rest of the year?
Yeah, great question. The Fed is forecasting that there's going to be 2 more rate cuts in November and December, totaling another 0.5 point, with more cuts coming next year. But Chair Powell emphasized to us that they are deciding this meeting by meeting. The data really matters here, Nora.
All right. What a day. Jo Ling Kent, thank you very much.